Hi guys, welcome back to my YouTube channel. It's me, the Frugaliffy. So a few weeks ago, I made a video talking about my coronavirus investment strategy. And because things have changed over the last couple of weeks, I thought I would make a really quick update video to tell you what changes I've made and explain why. I'll link that original video somewhere above so you can check it out. You may have noticed, I believe last week when I released my 5 money lessons I've learned from my immigrant parents, that I changed my strategy. And again, I'll link that up here somewhere for you to check out. So in the original video, I talked about the fact that I was going to be investing £1,500 over the period of 2 weeks, split into 3 £500 lump sums. The idea being that I would see how the market was going, and if there were more dips, I would put in another £500, and if there was another dip, I would put in another £500. So initially I felt really comfortable and confident with that approach. However, after I put the first £500 in and I was preparing to put in the second £500, I did, if I'm completely honest, lose my nerve. I started getting a little bit worried about the value of my pot. Was I going to be losing some more money? So I delayed. And the way my brokerage works, Nutmeg, is they invest your money twice a week, once at the beginning, once at the end of the week. So I missed the window for the beginning of the week's investment. So rather than investing £500 the week after the video I filmed, as I said I was going to, I decided to split my investment into smaller amounts. So put in £250, see how that performed, and then put in another £250 the following week, and then deal with the final £500 as I saw fit. However, within that period, the stock market rebounded a day, and again I lost my nerve because I then just thought, I've timed this really poorly. I should have just invested the whole £1,500 when I had the chance. I would have made a little bit of money. The value of my investments would have gone up, and I was an idiot. And so I kind of then just paused. And in pausing, it made me sit back and think about what I was doing. And I came to the conclusion that I was being incredibly reactionary and that I was going against the philosophy of investment that I'd been following for almost 3 years at this point. And that has been pound cost averaging, or if you're in the US, dollar cost averaging. So I want to take a moment to explain what pound cost averaging actually is and highlight why investing via this philosophy may benefit you in these times of great uncertainty. Okay, so what is pound cost averaging? Put really simply, pound cost averaging is a way of investing that smooths out the fluctuations in the market. This is the exact opposite of timing the market. Rather, you're investing relatively small amounts of money on a regular, staggered basis. So for me, for the past almost 3 years, that has been putting £300 into my brokerage account on the 25th of every month. So why is now a good time to consider pound cost averaging if you are an investor or thinking about investing? So the first thing I would say is that it establishes a good routine. I can't say this clearly enough. You cannot time the market. We will never know when the stock market bottoms out. You will never be certain that you're going to catch that day. As I found myself, a little bit of a delay and you've lost your window to benefit from the crash itself. So it is better for you to drip feed your money into the stock market and give your money more time to grow and compound than it is to time the market. Now, by drip feeding your money in, you're removing the idea of investing as gambling and taking a chance. Rather, it helps to put into your mind that investing is a long-term strategy and it does help you ignore short-term changes. Now, as I found over the last few weeks, investing little and often is a lot less daunting and it does help you manage your emotions. So that brings me on to the second reason you should consider pound cost averaging if you're investing today. And that is that it helps you cushion market falls and market fluctuation. As I've been investing now for the last almost 3 years, I've been investing in a bull market prices have been very high. So I've been buying pretty much at the peak of stock prices. Now that the market has fallen, I'm finding that I'm buying assets significantly cheaper. I'm averaging out the cost of the stocks that I'm buying. Now, we have had a significant crash in normal times, and even in this period today, what we will find is that the stock market will fluctuate. There will be some days where the stock market rebounds, and there will be some days when it falls again. By drip feeding money in, we kind of average it. We average out the expensive days versus the cheaper days. On days where your money is being invested and the stock market has fallen, the value of your investments later will be significant. You can actually buy more, and we should see it as a not a positive, but we should see it as a benefit. That we're buying more now, which will have a higher value later when the stock market corrects itself and starts to grow again, as we know that it will. Conversely, buying on the more expensive days should no longer matter because those cheaper days balance it out. And immediately you can remove the need to time the market from your mindset, and you can be less emotional about what value your money is bringing you. I think it's important to remember that investing is a slow and steady activity. The longer that you are in the stock market investing, the better. But if you try and time the market and get it wrong, you may make a mistake that you live to regret. So if you can, set up a direct debit into your brokerage account, drip feed your money into the stock market, take away some of the thought process there, take away some of the emotional pinch, and just ride it out. It's a long-term game. If you leave your money in long enough, 10, 15 years, your investments will grow and you will see the benefit, though I understand for all of us, it doesn't look like that today. To date, I have invested an extra £872 into my brokerage account, outside of my usual £300 a month automated payment. So this leaves me with £628 left from my original £1,500 pot. And I just want to note, because we are in a time of uncertainty, I will not be ploughing all of my cash into the stock market to take further advantage. I have limited it to £1,500 of cash that I have spare, that isn't in my emergency pot, that isn't in my pot for school. It's just cash that is freely available to me to invest. Now, the reason why I won't take any more than £1,500 really is because it looks like we may be heading towards a recession. And for me personally, cash is king. And the only thing that I have as a safety net is having cash in case I lose my job or anything happens to myself or any members of my family. So I don't want to have any money tied up in the stock market that I need. So I'm keeping all of my cash liquid. And I won't be investing anything more than the £1,500. But the only thing that I will add to that is, because I have some trips that I have now cancelled and I have money coming back to me from flights and hotels, I may end up putting some of that money into the stock market, because in my mind it's money that had already been spent, and in the grand scheme of things it's not a lot of money, but I will wait and see because I still have that money coming back to me. So there's that. So I still have, as I was saying, £628 left from my £1,500 pot. So what I'm going to do is pound cost average and drip that into the stock market. So rather than throwing it in right now, I'm going to probably invest an additional £200 a month for the next 3 months. Depending on how long this lasts and we're all inside, depending on what the recession looks like, I might stretch it out even further, because really I have no idea when the bottom of the market is going to hit. I would love to know what your investment strategy is during this time of extreme uncertainty, stock market crashing, pandemic, people getting sick, people losing their jobs. If you are investing, please let me know how you're going about it. What's your philosophy? Are you throwing all of your money in? Are you drip feeding? Are you seeing a benefit? Emotionally and psychologically, how are you feeling? about putting your money in and letting it do what it does? I would really, really like to hear. So please do drop down in the comments and let me know. Other people read the comments, so I'm sure it would help other people too. Anyway, if you like this video and you'd like to see more, please do give me a thumbs up, subscribe, and I will see you in the next one. Thanks. Bye.